this session, of course, leads on beautifully from the issues that were brought to the fore on the investment climate. We all know how critical infrastructure, and particularly regional infrastructure, is to building the conditions for private investment and growth. And yet, we have not made anywhere near the needed achievements in this area. And just as an example, in 2008, I was invited by the president of the G8, the then president Italy, to a meeting of the Infrastructure Consortium on Africa. And I found that I was the only private sector participant in a room with the African Union, NEPAD, and about 35 powerful development partners, including our friends from the World Bank. And on the table were these incredibly large, difficult infrastructure projects that are the key to moving forward, but no private sector participation. So I think we need to applaud our friends at Africa Investor, the World Bank, the IFC, our other development partners, in really pushing forward the practitioners getting together, again, this theme that Pierre put forward of partnerships, because this is how we're going to get the deals done. So we're really honored to have our speakers today. We're going to start with Prakash Handula, who is CEO and founder of the Handula Group, and Hinduja.
Yes.
Okay, thank you. And we're just going to roll through some questions and put some provocative ideas, solutions on how to tackle the beast. So my question for you is, where do you see opportunity for private sector investment in infrastructure? How do we really move forward in a practical and concrete way for results?
Thank you, Madam Samuel. It's really a pleasure to be here today. So I'd like to thank Your Excellencies and ambassadors and friends, whoever are here today. It's a privilege to be here today, and I want to thank Mr. Danzo from African Investors and Mrs. Samuel. It's an honor to participate in the panel where we have we can enhance infrastructure development, which is indispensable to economic development in Africa. I'm here as the chairman of the Hinduja group of companies. We are a very diversified group in different verticals, among these power, energy, and transport, education sector development of infrastructure. We also active in development of banking and financial services and business processes, outsourcing, call centers, and we are proud of creating many excellent high-skilled jobs in these sectors. We operate under my father's principle, which is a key success of our group. Work to give, my word is a bond, act local, think global. Partnership for growth, advance fearlessly. We have played a vital role in development India's infrastructure over the past couple of decades. We have built significant wind farms in India. We are also constructing now a 1,000 megawatt coal plant in coast of eastern India in Visakhapatnam, which will really, end of the year, is nearly getting to be under the program of inauguration. These projects do need government involvement. That's a key point. And ensure consistency of taxation, consistency of regulation, consistency of regarding zoning, and access to the low-cost finance. This also links for the Africa. Another area that we know well is transport. Through our company, Ashok Leyland, we have built not just buses, but appropriately engineered buses for rugged road conditions, which we have in Africa. Everybody is facing big problems because of the infrastructure. We have provided these at an affordable price, and we have also provided affordable and easy to serve the spare parts. However, we have been content to supply the goods. We have been instrumental in training drivers, training mechanics in safe and efficient practices. Furthermore, we have designed bus systems so that now 77 million people in India are using our buses for transport throughout India. The knowledge and experience we developed in India, we have transferred elsewhere, and also we are continually transferring to Africa also in many countries. We have designed transport systems, supplied the buses, part maintenance centers like Bangladesh and Sri Lanka, which anybody who sometime likes to visit these places, you can see Ashok Leyland's name is already going around these places. Today, however, I want to highlight opportunities for the private sector in Africa. We believe our experience in India is both relevant and transferable knowledge to Africa. Incidentally, we know about obstacles and not just opportunities from India, and our work is far from complete there. Opportunities abound in many places, to be sure. Africa is truly open for business today in the way that it may be been so readily in the past. It is more interconnected with the world. Government are more open and transparent, and the population is younger and more educated. Communication costs are lower and lower. The group has already leveraged our experience of India in Africa. Specifically, we have used our transport sector experience gained in Lagos. In India, Africa, we have developed bus rapid transit system under the aegis of World Bank and authorized by the Lagos state government, which is running profitably, and this program has been supervised by the World Bank, and we would very much like, if this method or this program has been successful, why not World Bank should continue the same pattern, same model in other African countries to improve the transport system. This I will emphasize to all our friends who are in the panel, who are focusing on the World Bank, should go and visit. And this is why the transport ministers are visiting now in Nigeria to see how this system is functioning and how we have done it. And they are very happy about what they have been not doing for so many years. This program started in 2007. Local firms to assemble buses. We are opening a fleet of municipal vehicles, including sanitation vehicles in Ghana, planning to develop the same in Nigeria and Rwanda. We have also supplied to Gabon and Tanzania and Angola. We have also significant experience in the power sector in India. Harnessing of the energy sources, including alternative energy power generation and transmission. This is surely a critical area of opportunity. Demand will not decrease anytime soon, as both population and energy consumptions per capita is bound to increase. Yet supply cost will technically advance, should be stable to decrease. The Hinduja Group stands ready to assist in developing these projects based on our Indian experience. The building and expansion of ports, faster flows of goods in out of country to another area where demand is apparent, where investment opportunities abound. Once again, if government can provide a consistency and perhaps, or more important, avoid the temptation of corruption and take anti-corruption measures, there can be many profitable opportunities for the private sector. Key to success is the private sector is a partnership between public, private sector, creating stable investors, friendly climate, provide for speed and reliability of decisions making, reducing corruption via transparency. Yesterday, Dr. Kim, I had a pleasure of meeting him, and he also mentioned that private and partnership in his speech should be the key point of the future World Bank's changes which are happening. With due to the sort of opportunity, growth increasingly educated, connected populations provides business will come even, long-term investments, provide borrowings cost are kept low and return high and compensate for the length for the time capital is tied up. For the largest project, it is not just capital or even mainly capital that is required a technical expertise. The best way for ensuring projects don't wither with having been announced in through multilateral partnership. A company such of ours, based of operations in emerging economy, faced with similar opportunities in overcoming these, earning successful returns as well as successful experience in partnership with companies and government through the world, is well suited to provide the expertise. Western countries, both public and private sector, if we need the debt of the equity capital, can also be provided in the biggest project in host countries in critical supplies in the right sort of environment. As investors, friendly environment where others can feel confidence in investing the long term. These days, there's need to be, they supply, they can also invest funds themselves, perhaps based is rapidly growing sovereign funds from the resources sales. In the long-term growth, the development of countries' infrastructure, the water systems, the electricity grid, the industrialist park, these investments social, having in turn lays the foundation of private sector's investment. At the same time, local companies can gain knowledge and expertise and serve in ground bidding by participating in these projects. Finally, the World Bank and the other international government and development agencies can has technically experts, referees from all regular publishes development scorecards, ensuring fairness, proper ethics, transparencies, accountabilities, providing confidence by investing portion of their own funds in select partnership, not to duplicate, but to partner with the private sector. I'd like to forward to your comments. Last not but the least, Indian families have been in Africa for last 100 years. Africans welcome India. India is their home. And we would very much like the programs, what's happening in South Africa. Gandhi came from South Africa. People are following, and the growth of South Africa, growth of Nigeria, Ghana, every part of Africa, you will find the Indian families are all around. So we would very much welcome the partnership, growth in all the business houses who are big, successful business houses should have a conference with the World Bank. A forum should be organized with the World Bank where all the rich African companies should come here with the Indian business houses and combine together and create a big world change and Africa to make a paradise in the world. Thank you very much.
Okay. Well, thank you. We have a visionary here about how to scale up. Thank you very much. We're going to proceed, and we're a little bit tight, so I'm going to remind our speakers 5 minutes, if I could. No, but he has challenged us, and so you've set the scene, and I thank you. So we're going to move to Bruno Wen, who's chairman of DEG. And my question for you is, where does DEG see the biggest opportunities for infrastructure investment and regional integration in Africa? And where do you specifically see the World Bank as being able to really catalyze those investments? Thank you.
Yeah, many thanks, Barbara. I'm very happy that you mentioned the G8 meeting in Italy, because at that time I was also representing the German government and KfW at this meeting, and I was always criticizing the meeting because we were continuously discussing on the private sector instead of discussing with the private sector. And I mentioned that because without a tough and a really comprehensive dialogue between the public sector and the private sector, we will not forthcoming with the infrastructure needs in Africa. And at the same time, since I'm the chairman of the European Development Finance Institute, I will elaborate a little bit on what we are doing and how we are seeing it. As the European Development Finance Institute, we have a combined portfolio of more than 26 billion now, and 1/3 of this is invested in Africa, and one third is invested in infrastructure. So it reflects very much that we see Africa, our neighboring continent, as a continent of opportunities. At the same time, also we see that infrastructure is a real need. And we see a lot of opportunities in the power sector, because Africa is starving for power, and at the same time also for, let me say, all the facilities which are needed to help African entrepreneurs to reach a competitiveness which allow them also to be integrated in the global market. So whatever is needed, railroads, port facilities, and so on, this in our view is extremely critical. What we have seen over time is that now there's a growing recognition of the role of the private sector. It is good. We also see that there are a lot of better investment climates in most of the African countries, which is also very good because this gives private sector also then incentive to look very closely to the business of opportunities in Africa. And we have also seen over time better structured PPPs. What I mean with better structured PPPs, to some extent, PPPs are always structured by the governments, but not with the aim to include the private sector and make use of the competence of the private sector, but mainly because they feel that there is a financing gap and the private sector should come in and to fill this gap. And this will not happen because nobody in the private sector will come in simply to fill the gap, the financial gap, without having the opportunity also to make a profit, which enable the private sector also to take care of the huge risk he's taking. So this once again requires that we need this kind of dialogue. But there's always a but. I think we still are faced with a lot of challenges, especially when it comes to regional integration and regional infrastructure, because it is difficult to imagine, although I see that some of the private sector people, they are trying to do that, to deal then with 3 or 4, 5 different governance involved in a particular infrastructure project. This is too complex, the transaction costs are too high, and the risks are also extremely high. And this is why I like to encourage the regional economic communities, also the African Union. They have to play a role when we have to structure these regional infrastructure projects. The second but is that we should also understand that infrastructure is not an aim by itself. Better roads, better railways will not improve the competitiveness if we do not remove these non-tariff barriers we have seen in Africa. We as DG, we have an equity stake in a company in Tanzania which is called Prime Fuels, and they run 160 trucks and locomotives. And I know from them that it takes the trucks days to cross the border. And you can improve the infrastructure, but if non-tariff barriers are not removed, then we will not increase the competitiveness. The second I would like also to remind ourselves is that when it comes to the power sector, in most of the African countries, we are confronted with not so much enabling environment for the private sector, especially when the private sector needs to deal with the public sector by using the transmission and the distribution network. So from a private sector perspective, reducing risk means that decentralized power projects are much more easier to structure by the private sector, because by doing that, we are providing a direct power supply to industrial companies, to industrial estate, and so on, so avoiding to deal with the public sector. And I mention that because I still believe that the World Bank can play a crucial role, the World Bank Group, to be fair enough, that MIGA, for example, and I hope that Michael will elaborate a little bit on that, that they can provide guarantees which help then the private sector to reduce the risk dealing with these kind of projects. But at the same time, I think also that the World Bank has to play a crucial role in terms of capacity development. I still see that a lot of governments have difficulties to deal with the private sector when it comes to infrastructure investment, because you need a lot of knowledge, and the private sector people, they're coming with hundreds of lawyers and highly sophisticated analysis, financial analysis. We are running very complex financial models, and if governments do not understand these issues, then right from the beginning we have a problem, because then the belief is that the contracts negotiated and agreed upon are not fair and transparent right from the beginning. And I think these are two major issues. We would like to see that the World Bank can do a lot, and by doing that they can leverage and open the market for the private sector. Many thanks.
Wow, that was very inspirational. I have to take my hat off on your points. For example, on capacity building, it's also with the local banks, because when we talk about domestic resource mobilization, the sleeping capital in the banks and the pension funds in Africa, and for example, in Tanzania, you mentioned the payment risk, for example, of TANESCO. Very real issues where we need our friends at the World Bank, the IFC, MIGA, working with ATI and the others to really provide solutions yesterday. Other words, so that was terrific. Thank you. So we're going to get more pressure now on our World Bank friends to come forward with solutions. We're moving to James Close, who is head of PPIF. And James, my question for you is to tell us about PIAF's new strategy on supporting private sector infrastructure investments in Africa.
Thank you very much, and good morning, everybody. I think, Bruno, you've set me up very well there, because PIAF is a World Bank multi-donor trust fund, and our responsibility is to build the capacity at the institutional level to enable private sector investment to flow into infrastructure. And I'll talk about 3 specific roles that we have and how we're defining those in our new strategy. But the first is to set out the nature of the opportunity here. And we work globally, but Africa is a major focus for our donors. So 70% of our activity is there. And through our funding of the public-private infrastructure database, we get a good handle on the level of activity that's going on in Africa. So I think it's just useful to ground some of this discussion in the scale of the opportunity. So in 2011, it was estimated that sub-Saharan Africa needed $93 billion worth of investment into infrastructure a year, and governments could contribute about $45 billion, which left a gap of $48 billion. And we know from our PPI database that there were $13 billion worth of investment coming into infrastructure in Africa in 2012. 8 billion of that was in telecoms, which is a fairly, in many ways, mature market, and 5 billion in energy. And this represented a 13% growth over last year, so showed some success, but also shows the nature of the opportunity and the gap that exists there. Interestingly, we've seen the growth in private investment into infrastructure grow by about 8.3% per annum, which is outpacing regional growth, which is about 4.5% per annum. So there's some really good news here. Also, there's an enormous potential supply of capital to come to potentially good projects. And our role is to try and increase the flow of that capital to those good projects. And we can do that in conjunction with organizations that can credit enhance some of these investments. So I'm sure Michael will talk about how MEGA can do that. And there's obviously been a big call for him to do it already. But our role really is to reduce risk, and we reduce risk through institution building, and we're increasingly doing that in a programmatic way, and that's the second feature that I'll talk about. So, for example, we're working in West Africa on a PPP platform across that region to accelerate PPP growth in West Africa, and we're working closely with Agence Française de Développement, who obviously have a significant interest in all of that. But also the African Development Bank as well, and that has huge potential for rolling out public-private partnerships across West Africa. We also work at a country level, and we've been working, for example, in Ghana for the last 10 years, and we've been working at all kinds of levels in building institutional capacity. So some of the projects that we work on are relatively small scale, so how to finance, for example, a footbridge off the advertising revenue that actually can exist through attracting local capital, or indeed rolling out a program of PPPs across latrines across the whole of Ghana at a municipal level. But we also work a much more macro level on some of the large-scale energy and water projects in Ghana as well. And the third area we're working both in partnership and programmatically is at a subnational level, where we're in fact going, and President Kim has talked about this, about the Cities and Climate Change Programme, where we're rolling out credit ratings for municipalities and utilities to help them attract capital at a much lower cost so that they can then invest that into infrastructure. And finally, I'd say our other part of our role is around disseminating best practices. And Mr. Hinduja, thank you for that tip around Nigeria. We'll certainly look into mass rapid transport there and develop a case study that we can then disseminate to other colleagues, both in Africa but also internationally, so that there's a flow of learning that's coming from some of the really excellent projects that have been done in Latin America that can be replicated in Africa. So it's a really exciting time for PIAF. We see ourselves working very closely with the bank on delivery of the strategy, and with all of you as well in partnership to create the institutions that are going to enable private sector investment to flow.
Well, we thank you, because we know that our biggest problem is we have a lot of ideas and aspirations, but without the initial preparation work, and especially identifying the success stories and getting them, really abstracting what models, templates, roadmaps work, and getting them out there, we'll never get out of the mud. So thank you for that. Now, we're moving on to a very important speaker from an incredibly instrumental organization in Africa. We have Tamsin Barton, who's Director General for Operations of the European Investment Bank, who, of course, a huge powerhouse that has delivered great results in Africa. And my question for you is, how is the EIB assisting investors across infrastructure investments, and especially regional, that very difficult, as Bruno said, the very difficult transactions that go across border? Thank you.
Thanks very much for that introduction. The EIB is the EU's project bank, if you like, to contrast us with the central bank or possibly even the European Bank for Reconstruction and Development. We focus on investment in sound projects. And we were actually set up originally, our purpose was to invest in the infrastructure to join up the EU. So that's really our core business, if you like. I would be perhaps claiming too much if I said I was responsible for all the operations of the European Investment Bank. I'm only responsible for our operations outside the EU. Just to give you an idea, outside the EU we invested 7.4 billion euros last year, of which about 1 billion was in Africa, Sub-Saharan and North Africa. And 63% of that portfolio was infrastructure. So that really remains our core business. We do a bit of everything, and our slogan is that we lend, we blend, and we advise. So I'm going to talk a little bit about each of those. And in terms of the lending, most of it's senior debt, but we also do equity guarantees and so on. Advice is absolutely central to everything that we do. We bring the expertise from what we've learned within the EU to bear outside. And whether that's financial structuring expertise, or we actually have about 300 sector experts and in areas like energy, water, transport, etc. But to come back to this regional question, we know exactly how difficult it is even to invest in developed countries effectively in regional infrastructure, and the kind of policy barriers that there are. I always find it a great irony that we have such a poor rail transport between Luxembourg, where we're headquartered, and Brussels, which is where most of the EU institutions are. And we've been there since 1958, and we haven't been able to solve that, basically because of issues between the relevant governments that I won't go into. So we know it's difficult there. How much more difficult is it in Africa? It's really challenging. So recognizing that, I'm very much working the European Union together with the African Union and the regional economic communities and the Infrastructure Consortium for Africa, indeed. Back in 2007, it was agreed to set up something called the EU Africa Infrastructure Trust Fund. So that's the kind of takeaway that I'd like you to have from at least my first intervention today. Because the issue is, yes, definitely there's a need for at least $93 billion of investment, But I think, as you've already heard, how challenging it is for investors to find the bankable projects that they can invest in. And so this is one really very key tool, because deliberately the choice was made just to focus this on regional infrastructure, precisely because it's so hard that it effectively needs some form of subsidy to get those bankable projects together. So a lot of the, there's actually a total of 947 million euros in this fund, and so far 77 projects have used grants from the fund. A lot of this is project preparation, technical expertise. It takes, sometimes even decades actually to get these big regional projects off the ground, and we need to allow for that. Sometimes it's direct grants for specific elements of a project that might otherwise not get funded, so maybe it's the safety elements if it's road transport. It might be interest rate subsidies, it might be insurance premiums, but there's no question, without this kind of money, then we're never going to be able to leverage in serious investment. And we estimate that the leverage figure at the moment is probably about 12.5 or so. We'll see how that changes over time. But this is an instrument where, for the most part, it's the European institutions that are involved, although sometimes the World Bank is involved in the same projects. But I think the key is that without this kind of subsidy, you'll never get strategic investment in infrastructure. I think if we just left it entirely to the private sector, then basically we'd just see transport from mines to the coast. And you wouldn't see what you need and what we've needed in Europe, which is the strategic hubs, the strategic corridors that enable growth, that enable trade, that enable companies to succeed. So I'll just close by mentioning an example of the kinds of infrastructure that I mean. And I think colleagues on the table, I'm not sure yet we've got the Hinduja group involved, but I hope we do over time. But others are definitely involved in the West African power pool. I think it might have been mentioned actually by Bruno, which develops electricity exchange between the ECOWAS countries. So we were one of those who assisted in the preparations for the investment evaluations for the priority interconnections. So Ghana, Burkina Faso, and Mali. On the one hand, Cote d'Ivoire, Liberia, Sierra Leone, Guinea, and Cote d'Ivoire, and Ghana. And I mean, a lot of those countries, not the easiest environments in which to work. So our loan was just 75 million. But I think it was possibly the long-term technical support which really made the most difference in the long run. So these high-voltage transmission backbones are going to be absolutely crucial for stable and cleaner supply of electricity, also picked up by colleagues here. As the EU's bank, we have very, very strict policy in terms of the projects that we can support. In fact, we've just adopted a new policy which sets basically an emission performance standard. Now, in the least developed countries, there might be a case of not always for going for the greenest solution, but very often and increasingly, it is actually the best solution, and our economists definitely spend a lot of time working out what is the most sustainable institution. So I'll finish there, because there are a few projects I could mention, but I'm hoping we're going to get more chances to answer your questions about those, and hand over to the next speaker. Thank you.
Well, we thank you, because that's what you're doing, the heavy lifting, for example, on the preparation side, is really the bottleneck. So this is a wonderful. Now, if I dare, I'm going to break protocol. Bruno has to leave. So, Michelle, with your permission, I'd like to see if there's any specific questions for Bruno, because he is unfortunately going to have to leave in 5 minutes. Yes, Mahesh. Please give
the head
your
of
full name, Mahesh.
Mahesh Kotecha, President, Structured Credit International, New York. My question to DEG, you mentioned a project in Tanzania. I wonder if you could elaborate on how that's going. There was actually a similar project some years back which led to a case which was litigated and settled, but it took a long time. I hope you are having better luck in the project. Thank you.
I think this is a logistic company, and they are very successfully running a truck fleet and locomotives and so on. And they are extremely efficient. They're using a GPS system because they have a very clear mission. They would like also to make a clear statement to their clients when they can expect to receive the goods they are needed as part of a global value chain. And then the problem is that if your trucks are then stuck at the border, although these are trade unions in the Eastern African community and so on, but still the customer people they're asking a lot of questions. They would like to see a lot of papers. Then, and this is the clear message, then we cannot, by simply increasing the capacity of infrastructure, help companies to increase the competitiveness. And this I think is the final aim. And since I have the floor, I would like also to raise an issue Barbara mentioned. I just returned from some conferences we had in Paris at the OECD, once again on Africa, and we talked a lot how we can mobilize internal resources. Africa is rich in terms of resources. These are the pension funds. There are liquidity blocked in the banking institutions, but these funds are not being used for development. And especially when it comes then to infrastructure, we need these funds because also in order to reduce the risk of investors and to come to, let me say, more balanced structuring in which we use local resources also to finance local currencies, so that at the end we have a more balanced approach and have a more sustainable project design. And we have discussed this at length with Governor Sanusi from the Central Bank of Nigeria, what governments can do. And governments can do that by simply changing the way in which pension funds or banks are working and realizing this potential. This would give also a major impetus to a private sector development in the infrastructure in Africa.
Is this a question for Bruno? Okay. Why don't we take, how many questions do we have? Let's take them at the same time. 2 more? Is that it? Okay, very quickly, and then we have a question, then we're going to say goodbye to Bruno and go to Michelle.
Yeah, actually,
Thank you.
Bruno, I mean, it's happening. As the African Development Bank, we have our first private equity investment in Nigeria with a Nigerian private equity investor, general partner, and we mobilize, actually, we put 20 million, and we mobilize 68 million from pension funds. So this is the first step. It is happening. And second thing, as I mentioned earlier during the panel, we are setting up Africa 50. Africa 50 will be mobilizing all those resources.
No, I think.
Wait, and
yeah.
just have the question and then.
Thank you very much. My name is Geshem Pasi. I'm with the Zimbabwe Revenue Authority. Very interesting about the NTBs at ports of entry. We accept the delays. Could it not be also as a result of capacity building within the administrations, always lagging behind? There's not much investment being done in those areas. In this day and age, it's sad to note that across Africa, you still have administrations which are paper-driven, and yet the whole world has moved on with technology. So shouldn't we be focusing really on that? Otherwise, we'll always be blaming the delays. But if we don't do something consciously, then we will not have done much and will not have the benefits which you alluded to, which should emanate from the improved infrastructure, such as the transport sector. Thank you.
Thank you. Bruno?
No, yeah, you're right, completely right. We as European Development Finance Institutes and also the other development finance institutes, we are solution driven. And this is why we are also participating in these kind of dialogues, because to make also governments aware what is possible but what is not possible, and also to make the private sector aware that there are opportunities. And especially in the context of Africa, and I say that in my function role as the vice chairman of the German African Business Association, we are always confronted with a negative perception of Africa. Africa is still perceived as a continent of crisis and high risk, as a continent where we need to provide charity, but not as a continent where we can do business. And this we have to change. And this is why this kind of dialogues and the African Investor Forum is so important to get this message across. And actually, what we are now doing during the annual World Bank meeting, we have always a private sector roundtable together with our colleagues from the IFC, with the other international finance institutes. And what we will do on Saturday, we will discuss the issue what we can do in the context of, especially in the context of Africa, in order to promote much more power in countries which are characterized to be fragile, so where we do not find the right enabling environment for the private sector. And I'm very much convinced that within the industry, we have a lot of expertise and we have a lot of different institutions with different instruments, so that by working together, more closely together in a very coherent way, we can do a lot in order to solve the infrastructure issues in Africa, especially when it comes then to the fragile states. Because if we always continue to argue that we as development finance institutes, we follow investors are not going in the fragile states because they perceive the risk to be as high, then nothing will happen. And so we would like to start with this, and we are very much committed to coordinate. Especially in the context of the European Development Finance Institutes, we have a subsidiary together with our colleagues from the European, we have two subsidiaries with our colleagues from European Investment Bank. One is called the European Finance Partner, and the second is the Interact Climate Change Fund. And these are vehicles we have created in order to make these more coherent, coordinated way in which development finance institutes are working together more suitable, so that we have increased, that we have realized a lot of synergies, that we have increased substantially the efficiency, and by doing that we have substantially reduced the cost for clients to work with DFIs and IFIs.
And for Tess,
Yeah,
can you follow up later? Because I mean,
okay.
this is great, but partnership is across the DFIs. Very critical.
This we have to do.
So thank you very much, Bruno. We thank you. And Michelle, now you're going to have a big challenge to thank you. Yes, thank you. So, Michelle. You see, let me introduce you. Michelle is the Vice President and Chief Operating Officer of MIGA. Historic breakthrough in the World Bank Group when MIGA was set up. Very important. My question for you, Michelle, is how is MIGA today assisting investors across infrastructure investments, especially regional, that really big demon to fight for, through its instruments and innovative approaches? Thank you.
Well, thank you very much. And let me start with by taking you back in time to 12 years ago and to Côte d'Ivoire. That was a country that looked like the most stable country of West Africa. I was at the time working in Société Générale, and I was writing information memorandum for private financing in that country, and saying that it was the country that had been stable for so many years that it was okay to put Société Générale's money into that country for big projects that they were undertaking at the same time. And it was not only my bank, but there were a number of banks that were quoting at the same time Côte d'Ivoire. Now, 12 years later, this country just emerges from one of the major civil crises that it has been that any country could have gone through. And the country is trying to recover and rebuild. And we'll hear a bit later at lunch from the Prime Minister. But what I can tell you is that one of their big objectives is to reconstruct and to accelerate the construction of the infrastructure. And they will not be able to do that only on taxpayers' money. They will need to bring private financing. But private financing will not come unless there is political risk insurance. And that's why MIGA was created in 1988. MIGA is there with one single purpose, which is to allow investors to come by taking away some of the concerns they may have around the breach of contract by governments of their own obligations, war and civil disturbance, fear of expropriation. These are all fears which prevent investors from going into countries, or if they go, they price it very high. So MIGA went back in Côte d'Ivoire 2 years ago, provided $750 million of guarantee to that country, mobilizing $2.3 billion of investment just over the last 2 years. And the country was not only interested in seeing these investments happen, they were interested in the signal that was given to the citizens about stability that these projects were about. Power, the Azito power plant, the third bridge of Abidjan, the gas development of Foxtrot, these were all the visible projects. You ask any citizen in Abidjan what is really the big project that they think is happening right now in their country, they will mention one or several of these. That's where MIGA was. Now, why can MIGA do that? And MIGA can do that for one simple reason. Its loss ratio is very, very low. And why is it low? Because we are part of the World Bank Group. So that means that at times of difficulties between the private sector and the government, and that always happens in the life of a PPP, we've heard earlier about the difficulties of PPPs, then the leverage that the World Bank has on countries and the good relation, the strong relation, the policy influence that we have is going to help mediate, bring the parties to the table and avoid that the project goes to a catastrophic end. In the whole history of MIGA, we did about 700 projects. Only in 2 cases did we not succeed in getting the parties together when problems occurred. And problems occurred in more than 100 cases of the 700 that I mentioned. Africa, for MIGA, is big. Last year, it was 2/3 of our new commitments were in Africa. And when you ask where were they were mostly in infrastructure. Infrastructure is the name of the game right now in Africa. That's where investors want to go, and that's where MIGA's instruments are the most useful. So it's useful not only for the countries, because they want to get a supplement to whatever they get from donors, and they want to limit how much taxpayers' money, how much they use of their own resources for this infrastructure, so they want the private sector in. And it's very important also for the investors who want to get the returns that they find in Africa. I should say that within infrastructure, energy has been big. And responding to your question about regional projects, there were a number of regional projects where MIGA was able to help. For example, the West Africa gas pipeline was done with MIGA guarantee. The Mozambique-South Africa gas pipeline was also done with MIGA guarantee. Very often they're an off-taker, but sometimes the place where the project is located is of worry to the investors. We can take away the political risk of the place where the project is located in order to make that happen. So if you have hydro power projects which are happening in 3 countries at the same time in East Africa, this is where the MIGA guarantee can be helpful. When people are going to start thinking about INGA, everyone talks about INGA, MIGA will be deployed as a way to go. I should add that for MIGA, fragility, conflict countries are a big area of increase. Last year, 40% of our new commitments were in post-conflict country and fragile countries. $1.2 billion of new guarantees were in those countries. So when Liberia, we were talking about Liberia, when we're going to talk about Sierra Leone, when we're going to talk about some of the difficult countries which find it complicated to attract private financing, MIGA will be key. So there is a new product now in MIGA that is also going to be very helpful for the countries. It's called the non-honoring of sovereign financial obligation. What we can do now in MIGA is going to be very important to countries to know, is that if they take a loan for a project, a public project, then we can guarantee that private loan against default. And because MIGA is an implied AAA, it gets them much better terms than what they could get otherwise. Angola just did a power plant, $500 million. It completed the Kabambe hydropower project. That was done with a MIGA guarantee, $500 million. So it's, this is allowing the country to get borrowing at more than 13 years, I think, or 15 years, very long periods, and at terms they couldn't obtain on their own. All of you know how banks are right now so conservative about lending to developing countries. With a MIGA guarantee, they can. So it makes a big difference. Finally, we work very much with all these partners, IFC, others, and you are going to see us together. So I'll stop here, but just think about MIGA at the confluence of the desire of countries to get the investments and of investors to get the returns.
That was exactly at the mark. We've gone through the whole pipeline of projects, investors, project preparation, but we can't get it done without mitigating the real risks. So MIGA is absolutely essential with the other providers of risk mitigation. We are running behind schedule, so if I could ask those of you who have questions to raise your hand, and we'll take them sequentially and then go to the panel, because otherwise it's going to eat into our break totally. So is that Mr. Applegarth? Yes.
Good morning. I'm Paul Applegarth, the CEO of Value Enhancement International. I began working with infrastructure projects in Africa more than 10 years ago. After spending a lot of time in Asia doing similar projects, one of the biggest differences between moving to Africa from Asia was the absence of a legal and regulatory environment within the individual countries to facilitate things like BOTs, BOOs, the variety, the rest of the alphabet soup of types of public-private arrangements within countries. This is probably one of the bigger obstacles to private sector investment, at least within individual countries, if not regionally. Unfortunately, that hadn't changed for a number of years. And I'm curious your current assessments of the situation and what, if anything, your institutions are doing about it.
Very pertinent. We have two more questions first, three more questions, so quickly.
Mine is directed to the PPIAF. You mentioned that you are encouraging the ratings of subnational entities and utilities. Could you elaborate on that, please?
Omar Guijo, Portals LLC. Question is for MIGA. Just wondering, do you only guarantee loans that a borrower is a public entity, or do you do so also for private borrowers for large projects? And what's the dollar range? What's the minimum loan you would guarantee? What's the maximum? And also, what's the criteria for successful loans that you would guarantee? And is there a cost associated with you guaranteeing loans for certain projects?
And this is our final question, is that it? Okay, thank you, please.
Yeah. My name is Brinsley Johnson. I'm with PKF, a firm of accountants in Sierra Leone. I was previously working with in the Ministry of Finance as Deputy Director for Public Financial Management Reform in Sierra Leone. My question goes to, is it the PPAIF? Yeah, and to the EU as well as MIGA and ADB. Sierra Leone, as correctly said by Mr. Bruno before he left, is a fragile country, post-conflict as well, has major issues. But as you rightly know, we have moved ahead and we're now developing quickly, and PPP is one of our critical areas right now. And I was very encouraged what I heard from the ADB about the integration of the infrastructure. But what I want to say is that my minister is here in the World Bank, and one of the major concerns we have is time. What's the time frame? Because I hear you're in Ghana for 10 years, and Ghana is a beautiful country. I've been there, and the infrastructure is moving very quickly. Sierra Leone could be a quick fix. It could be a success, a quick success, because the population is less than 6 million. The landmass is very small. So is it, what's the plan, the action plan in supporting Sierra Leone in this energy sector, telecos, and the other areas? Thank you.
Okay, one last question. We've got to make it, can you please make it short? Thank you.
LeJune Lang, iTaska Global Solutions. We're asking the European Union and the MIGA group about comprehensive standards for banking and for investment, similar to what was developed approximately 15 years ago in the EU countries, particularly for Albania and Moldova, to reduce corruption and allow for these kinds of uniform practices to occur?
We're closing out the questions now because we're running late. What I'd like to do is suggest that the lengthy part of the answers, for example, Michelle, in terms of your full sweep of products and prices and all of that, maybe you could do one off. But if we could just go down the line and each person provide whatever response within, you know, maybe a minute and a half, that would be great, and we can carry on outside. Thank you.
Okay, well, let me first pick up Paul's point around legal frameworks, and I think, you know, Ghana's a good example where we've been working to set up the PPP advisory unit and also the project and financial analysis unit, which actually starts to establish the basis for a rule of law around all of this. And in fact, as Ghana develops and moves on, it's actually recognises that it needs some new laws to support PPP. So that's a good example where I think the international development institutions and the private sector are coming together to put some incentive really around countries to develop the rule of law. And similarly, in the West Africa example I talked about, a big chunk of that is to try and, you know, leverage the existing laws and bring them together in a sort of common form that means that private sector investment can flow. So I think it's a great point, and you know that we see that PF as a fundamental part of our role. Let me talk briefly about the ratings that we're doing for subnational utilities and municipalities. So, for example, in Kenya, we did an exercise to rate all of the water utilities. I'm not rating them against, you know, sovereign U.S. sovereign AAA or AA, I suppose, at the moment at least. But relative to the Kenyan sovereign level. So what that gives you is a relative level of financial strength for all the 40-odd water utilities that exist. And we're doing similar things for municipalities. So we're actually working with FEMA, which is another World Bank trust fund, to improve the financial management of a series of African utilities to enable them to enhance their credit rating. So, you know, we see that as a really valuable tool to get some kind of common grounding of the risk that's inherent in these organizations. And I think that links really well to the time point. I mean, time is of the essence here, and the tools and interventions that we can bring very quickly are the ones that can really, you know, make a difference and accelerate the investment into private sector PPP projects. And, you know, that I think is a critical success factor around all of this.
I can respond quickly on three of the questions. What are you doing on the absence of legal and regulatory environment? Well, in the EIB, we don't do so much upstream compared to, for example, the World Bank Group. Most of our advisory is project advisory, so we coordinate with them. Having said that, we do actually have a sort of center of expertise on PPPs, EPEC, which is all about what we've learned from our own experience in the EU. Perhaps especially in the UK, where it's been longest. And there we have expanded to North Africa, so watch this space for sub-Saharan Africa. But of course, in the meantime, PF is a very key source of expertise. In terms of comprehensive banking standards, and that's an ambitious idea, which I find appealing. I mean, we do a lot of intermediated lending, and often as part of that, we do provide technical assistance in areas like risk management or know your customer, etc. I wouldn't say that we're yet at the stage of comprehensive standards, although we do tend to, you know, work to the same sorts of standards as other DFIs. So that's perhaps something worth thinking about. And the question about speedy PPPs from Sierra Leone, I'd say not too quick, I hope. I liked the point from the previous speakers about PPP being preparation. So you need that time. Having said that, the advantage is you can learn from our mistakes in Europe, I hope, and that at least will make things quicker through the help of colleagues like PF and EPEC. Thank you.
Well, very briefly, do we guarantee private loans? Yes. and we do both the loan and equity, and against the political risk. The range, there is no minimum, but we try. I mean, I don't think it's economical to work with a multilateral like MIGA if it's not for minimum $20 to $50 million project. The maximum, we are currently preparing a guarantee for $1 billion in Mongolia. Criteria: development. It has to be aligned with the development mission of the government. They also have to approve the sort of projects we do. But if it is a successful project which is going to be done, we'll be there to support it.
Well, you see, this panel has been so rich in its contribution. We have done the unthinkable. We are late. Let me just make a point that we have our inspiration here, examples of success stories, the challenge of replication, facilitating the partnerships for replication, bringing together the hard, and I love the point on grant dollars, to be able to do the project preparation, and of course, risk mitigation. And I want to point out that Africa Investor has a story this month on mega infrastructure investments. So again, we're all working hard to make all of this, and I would like to ask you to join me to thank our wonderful contributors here for giving us a roadmap, specific instruments, specific actions.
Doing business in Africa. You can't afford to be without Africa Investor.